It is time now for our weekly market monitor. He likes 3 companies. He says the shares are industry leaders that could see strong earnings growth over the next 12 months. Nick Giacoumakis joins us. He is president of the New England Investment and Retirement Group. Nick, welcome. Nice to have you here.
Thank you very much for having me.
And we start with Adobe. You say that they basically have been very innovative. They've transformed their business in many sectors. That's one of the reasons that you like it. Why else do you like it?
Sure. I mean, they have expansion of business in the artificial intelligence side of the business, where they're building that out. Also, in addition to that, the e-commerce side of their business has been quite lucrative. And if you look at even the earnings release that came out just today, even their older line businesses such as Acrobat and Photoshop, they're really hitting the numbers. So overall, for a company to be that large and to be producing those types of numbers, 21% revenue growth, that's pretty fantastic. So I think the trend going forward should continue.
Next one you have is retail, the furniture retailer now called RH. It's the old Restoration Hardware. What a year this company has had, both earnings and stock-wise. Do you think they can keep this momentum up going into the new year?
I do think so, Bill. I think it's a situation where creativity and innovation has kicked in, where RH has decided to go into the brick and mortar side of the business, and they have some beautiful, large, creative gallery stores that have really been drawing in the public and creating a lot of buzz. For example, just recently they came out with the ski home lifestyle store, obviously right in time for the winter season. So I think really they've differentiated themselves from the typical retailer that we see out there that's just relying on online sales.
And next we finish with J.P. Morgan, and you make the point that it is basically executing to a gold standard here in the United States, and it has also had a nice one-year gain.
Yes, and between the leadership of Jamie Dimon, obviously over the years building the business to the gold standard that they are, even as large as J.P. Morgan is, they're continuing to reinvent themselves. More recently, they're putting a thrust and a drive towards the wealth management side of the business, where they've partnered up with some of the Chase locations on the advisory side of the business for the high net worth and ultra high net worth side of the business. And this will help to not only increase revenue, but also to smooth out the earnings if and when we see a slowdown in the more traditional lines of business, such as commercial banking and lending. So for that reason, we really continue to see good things ahead for J.P. Morgan.
On that note, Nick, thanks so much for joining us. Nick Giacoumakis
Thank you for having me.
with
Appreciate
the
it.
New England Investment and Retirement Group.